Hey folks, welcome back to the channel. Thanks for stopping by. If you're looking for the next big opportunity in the semiconductor space, especially if you're into AI, then you come to the right place because today we're talking about Taiwan Semiconductor Manufacturing Company, or TSMC for short, the heavyweight champ of advanced chip fabrication. Lately, there's been a lot of chatter about some game changing AI competitor in China, and TSMC's stock dropped because of it. You know which company I'm talking about, DeepSeek. But to be honest, I think that whole sell off was a bit of an overreaction. In fact, I see it as a golden opportunity to buy TSMC on a dip because, hey, if one country or one new model says we can do AI cheaper, that doesn't exactly kill demand for advanced AI chips. In many ways, it can actually spark even more demand. That's what we're going to be breaking down. So definitely stick around. Before we get rolling, make sure you hit that like button if you enjoy fresh takes on the market. Subscribe if you're into deep dives on stocks that have massive potential, and leave a comment as we go. What do you think about TSMC? Are you bullish or are you still on the fence? All right, so TSMC stock took a bit of a tumble recently, double-digit percentage drops in some cases because of all of that hype on DeepSeek. People started freaking out that maybe this spells disaster for high power chip makers. I'm guessing the mindset was if you can train or run AI without fancy hardware, then you don't need TSMC's advanced nodes, right? But that's not really how it works, right? Because AI demand isn't just about the cost of training or inference, it's about scale, it's about performance, it's about robust data centers that need more and more computing power every year. Even if a super efficient AI model can do something at half the cost, guess what? It usually means businesses will want to spin up more AI workloads. If it's cheaper, they might just double or triple the usage. And who's making the chips that power these data centers? TSMC is. They're the foundry that big names like Nvidia, AMD, Broadcom, Apple, and many more rely on for advanced chip manufacturing. So, in my mind, if a new AI model breaks ground, that typically increases the demand for top tier chips that can handle the next wave of growth. It's like if you found a way to make high performance cars at half the price, you sell more cars and you still need top notch suppliers for critical parts. TSMC is the top notch supplier here. Now, if you think the hype around AI is winding down, you might be living on the moon because let's talk about the big news. Meta, Microsoft, Google, OpenAI, they're all throwing billions upon billions into AI data centers and HPC, which stands for high performance computing hardware. Some figures suggest that these tech titans collectively generate around $300 billion in annual free cash flow. Translation, they can sink a ton of money into AI without busting their budget. Meta is rumored to be spending around $65 billion on capital expenditures next year, with the bulk of that going straight into the AI data centers. Microsoft might be dropping $80 billion on AI infrastructure this year alone, and OpenAI, the folks behind ChatGPT, is apparently raising billions more at a valuation that makes your head spin. Amazon and Google Cloud are also all in on expanding their AI compute capabilities. So when we talk about TSMC, keep in mind these monstrous cash commitments. All these companies need advanced chips, and TSMC is basically the leading edge foundry that produces them. If you're building the future of AI, you're going to TSMC or you're not going to get the best chips. All right, let's pivot to TSMC's numbers for a second. Here are some highlights. Recent quarterly revenue growth was fantastic, clocking in around the high 30% range year over year. Their operating margins and gross margins are also hitting strong levels, somewhere in the ballpark of the high 50s for gross margin. For a company of TSMC's size, a near 60% gross margin is insane. You can't complain really. Most manufacturers dream of margins like this. Now, they reported that high performance computing chips has shot up more than half of their revenue in the recent quarters. HPC is basically the segment where AI chips live. So that's a direct reflection of how unstoppable the AI wave is. 3nm chips, 5nm chips, these advanced process nodes are driving a huge portion of TSMC's top line growth. The 3nm node alone was something like a quarter of their wafer revenue in a single quarter and is expected to get closer to a third next year. That's big news. Guidance, TSMC told us they expect their revenue to stay robust moving forward, even if there are some seasonal dips or shifts in smartphone demand at certain times of the year. Overall, they're projecting 30 to 35% year over year revenue growth next quarter. And let's be real, 30% plus for a giant like TSMC is exactly what you want to hear if you're hoping for continued momentum. Now, here's a big part of the TSMC story. They're investing heavily, like tens of billions of dollars heavily into new fabs, advanced tech, packaging solutions, and so on. We're talking 38 to 42 billion in capital spending for 2025 alone. That's up about 19% from what analysts used to predict. Why spend so much? It's simple. The AI arms race is still in its early stages. TSMC wants to maintain the lead in 3nm, 2nm, and eventually 1.6nm or 1.4nm nodes. Yes, we're talking stuff that gets even more advanced. By pouring money into R&D and manufacturing capacity, they ensure that they remain the go-to option for companies like Apple, Nvidia, and so on. TSMC has a US fab that's beginning volume production. Sure, it might not be as cost efficient as doing everything in Taiwan. Labor and construction costs are higher in the US, but it's a strategic move. It appeases American policymakers who want advanced chip production on US soil, and it also diversifies TSMC's manufacturing footprint in case that things get dicey in the Taiwan Straits. Also expanding in places like Kumamoto in Japan, possibly in Germany. Again, the cost structure might be a tad less favorable, but the strategic upside is huge. Access to local talent, government incentives, and less geopolitical risk concentration in Taiwan alone. Yes, in short term, these expansions can weigh on margins, maybe by 2 or 3%, but TSMC can handle it. With HPC and AI chips fetching premium prices right now, TSMC can offset those expansions by charging a bit more for the fancy new nodes. It's a classic trade-off: short-term margin dilution for long-term absolute dominance. Let's circle back to the new AI model that rattled the market, right? DeepSeek. The narrative goes, we can go as much with fewer or cheaper chips, so TSMC will sell less hardware. But consider the bigger picture. Cheaper or more efficient AI often expands the market. If it's cheaper to run AI, more companies will adopt it, which drives up hardware demand overall. Tech giants are not slowing down. AI investments, if anything, they're accelerating. Microsoft, Google, Amazon, they all want to stay on the cutting edge. NVIDIA's H100 GPUs and TSMC's advanced nodes are integral to so many AI workloads that even if DeepSeek or any other new face uses something else, the broader AI ecosystem is still gargantuan. HPC usage covers everything from natural language processing to self-driving cars. That's not going to go anywhere. So from where I stand, the market's knee-jerk reaction was just that. It was just knee-jerk. TSMC is essential to the semiconductor world. And if something makes AI bigger, TSMC wins. If something makes AI cheaper, TSMC generally also wins because usage skyrockets. Now, people often ask, what about Intel? Could Intel catch up and become the leading foundry for AI chips? Right now, that seems highly unlikely. Intel has faced yield issues, delays, and brand image problems in the advanced node segment. They're trying to pivot to a foundry model, but guess who's still the undisputed champion of advanced manufacturing? TSMC. Intel's also behind on the HPC front in many ways. Major AI chip designers continue to trust TSMC more. Samsung has also tried to challenge TSMC in the foundry space, but they've reportedly cut capital expenditures for next year. If a competitor is slashing spending when TSMC is ramping theirs up, that's a huge mismatch in which these two foundries see demand going up. TSMC is basically saying, we see massive growth, so we're spending big. Samsung apparently is saying, we might not have enough client demand or yield success to justify huge spending. If you're on the fence about TSMC's leadership, that difference in strategy should tell you a lot. Now, we cannot ignore the elephant in the room: Taiwan's tense relationship with China. There is a legitimate concern that any major conflict could disrupt TSMC's operations. If there's an invasion, a blockade, or some dramatic event, that's obviously going to be bad news. But here's the flip side. The US is deeply reliant on TSMC for advanced chips. Apple, Nvidia, AMD, like I mentioned, all these major American companies cannot operate at the cutting edge without TSMC. Politically, it would be devastating for any government to allow that supply chain to get destroyed. China also needs TSMC for mid-range chips in smartphones, automotive robotics, etc. If you can't get those from TSMC, you're out of luck. So TSMC's push to build capacity overseas in Arizona, Japan, and maybe Germany is partly to mitigate that risk. If something truly catastrophic happens in Taiwan, at least some advanced capacity might still be up and running somewhere. So yes, there is a risk, but it's not a TSMC specific risk alone. If anything catastrophic happened in Taiwan, the entire tech ecosystem worldwide would be in chaos. This is bigger than just one company, and ironically, that's also one reason folks think a direct conflict might be less likely. Everyone depends on TSMC. Now let's talk about the valuation. A lot of the hype on AI stocks are trading at insane multiples, right? We've seen names like Nvidia rocket to valuations above 30 times forward earnings, sometimes even more. Meanwhile, TSMC's forward PE is often quoted in the high teens to low 20s. Some numbers point to around 19x or 21x forward earnings. Either way, that's cheaper than many other big semiconductors or AI related stocks. And then there's the PEG ratio. A PEG ratio under 1 is typically considered undervalued, meaning you're getting more growth than what's baked into the price. TSMC's PEG ratio is floating around 0.6 to 0.7 by certain estimates. That's an attractive discount, especially when you see much unstoppable AI momentum in TSMC's revenue channels. Why is it so cheap? Well, part of it is, like we mentioned, the geopolitical overhang. Another part is that TSMC is a manufacturer, so maybe it's not as sexy as some pure play AI software name. But from a fundamental standpoint, you get huge growth, a moat that's incredibly wide and relatively modest valuations. That's a trifecta if you ask me. Let's get more into the granular on some of the TSMC's recent quarters. Q4 2024 net sales jumped up roughly 37% year over year, beating many expectations. Gross margins hovered around 59%, which is the near top end of TSMC's guidance range. EPS soared as well above 50% growth. That's not normal for a giant of TSMC's scale. It's really crazy. Q1 2025, the company guided for revenue in the range of 25 to 25.8 billion, which translates to a robust year-over-year jump north of 30%. What's driving all these numbers? Like I mentioned, the high performance computing again. HPC has grown from 43% of total revenue up to more than half in a year's time. That's the staggering shift. The 3nm and the 5nm processes are also at near full utilization, spurred by massive orders for next-gen GPUs and advanced smartphones. So when you see these segments account for such a big chunk of TSMC's total wafer revenue, it underscores how essential TSMC is to global AI and smartphone ecosystems. One reason TSMC stays miles ahead is that they aren't just printing wafers, they're also dominating advanced packaging technology, particularly something called chip on wafer on substrate. If we're playing devil's advocate, one possible concern is that TSMC's 38 to 42 billion capex could lead to overcapacity if AI ever slows down. Could that happen? Sure, in theory. Semiconductors are cyclical, but we're still in the early innings of the AI wave with new use cases cropping up constantly. Autonomous vehicles, robotics, VR, AR, advanced cloud computing, you name it. Another potential pitfall is that if the hype around AI outpaces actual monetization, we could see a cyclical downturn. But TSMC has a long track record of navigating cyclical dips effectively. All right, should you buy, sell, or hold TSMC? I'm really bullish. In fact, I think TSMC is a stellar long-term bet for anyone looking to get exposure to the AI hardware sector. It's not as flashy as buying a pure AI software name, but that also means you're not paying a nosebleed valuation. You get real manufacturing capabilities, a near monopoly on leading edge chips, and unstoppable demand from tech giants across the globe. That's about as attractive as it gets. Bottom line, the recent drop in TSMC's share price looks like a discount sale to me. The concern swirling around a more efficient AI model out of China doesn't really hold water if you think about how technology markets scale. Efficiency fosters adoption, which fosters growth, which fosters hardware demand. TSMC's fundamentals remain rock solid, and their expansions, although expensive, are shoring up their future as the undisputed champion of advanced chip fabrication. I see far more upside than downside here. So there you have it, guys. That was a long one. TSMC is right at the heart of an AI mania, pumping out the advanced chips that make everything from ChatGPT to the next self-driving algorithm function properly. Their financials are strong, and their future expansions signal confidence that AI demand isn't going anywhere. Could we see some temporary dips if the market freaks out again over new AI breakthroughs? Yes, it happens. It's gonna always happen. But long term, I'm convinced TSMC is going to keep trucking upwards. Let me know what you guys think in the comments. Are you snapping up TSMC shares on these dips like I am, or do you have a lingering reservations about the geopolitical landscape or potential overcapacity? I'd love to hear your take. While you're down there, don't forget to smash that like button if you enjoyed this video. And if you haven't yet, make sure you hit that subscribe button so you don't miss more deep dives like this. I appreciate you hanging out with me today. TSMC's story keeps getting more intriguing, and that's part of the fun for us market watchers.